Welcome to a place where the hidden mechanics of wealth begin to reveal themselves, where the surface-level understanding of money gives way to deeper insights about power, influence, and the systems that shape financial success, and where you begin to see that wealth is not just about earning more, but about understanding how money moves, how it grows, and how those who possess it continue to expand it over time. Today's audiobook, How the Rich Get Richer. The Truth About Money and Power, is designed to take you beyond common advice and into the underlying principles that govern financial growth, helping you understand not only what the wealthy do differently, but how they think about money in ways that allow it to multiply and sustain itself. Before we begin, take a moment to support the channel by subscribing, liking, commenting, and sharing this with someone who is ready to see money from a completely different perspective, because your support helps this message reach those who are seeking clarity and transformation. And now, allow yourself to settle in, focus, and fully engage with the ideas that have the power to reshape your understanding of wealth and power. Part 1. Understanding the system behind wealth. To truly understand how the rich continue to get richer, you must first look beyond individual actions and examine the systems within which wealth operates. Because money does not exist in isolation, but moves through structures, institutions, and networks that influence how it is created, distributed, and multiplied. And those who build significant wealth tend to understand these systems at a deeper level, allowing them to position themselves in ways that align with the flow of money rather than working against it. And as you begin to explore this perspective, you may start to see that financial success is not just about effort, but about awareness, about recognizing where opportunities exist within larger systems and how to engage with them effectively. One of the key differences between those who accumulate wealth and those who do not lies in how they view income. Because while many focus solely on earning through active work, trading time for money, the wealthy tend to prioritize creating streams of income that are not directly tied to their time, allowing them to scale their earnings beyond the limitations of individual effort. And this shift in focus from linear income to scalable income creates a foundation for growth, enabling money to continue generating more money even when they are not actively working. And as you begin to understand this concept, you may find yourself reevaluating how you approach earning and exploring ways to create additional streams of value. Assets play a central role in this process, because unlike liabilities, which consume resources, assets have the potential to generate income or appreciate in value over time. And the wealthy consistently allocate their resources toward acquiring and building assets that contribute to their financial growth, whether through investments, businesses, or other income-producing opportunities. And this disciplined focus on assets creates a compounding effect, where each asset contributes to further growth, reinforcing the cycle of wealth accumulation. Compounding itself is one of the most powerful forces in wealth creation. Yet it is often underestimated or misunderstood, because its impact is not always immediately visible, developing gradually as small gains accumulate and build upon each other over time. And those who understand compounding are willing to be patient, to allow their investments and efforts to grow steadily, recognizing that significant results often emerge from consistent, long-term commitment rather than short-term gains. And as you begin to appreciate this principle, you may find that your perspective shifts from seeking quick results to building sustainable growth. Leverage is another fundamental concept, because it allows individuals to amplify their results by using resources beyond their own, whether through capital, technology, or the efforts of others. And the wealthy use leverage strategically to expand their reach and increase their output without proportionally increasing their effort, creating efficiencies that enable faster growth. And as you explore this idea, you may begin to see opportunities to apply leverage in your own life, finding ways to extend your impact and scale your efforts more effectively. The concept of ownership also plays a significant role, because those who control assets, businesses, or systems have a greater ability to influence how value is created and distributed. And this control often leads to increased financial rewards, as ownership allows for participation in the growth and success of what is being created, rather than simply receiving compensation for contributing to it. And as you begin to think more in terms of ownership, you may find yourself seeking opportunities that offer not just income, but a stake in long-term growth. Another important factor is access to information, because the ability to make informed decisions depends on understanding markets, trends, and opportunities, and those who are financially successful often invest time and resources into acquiring knowledge that gives them an advantage, allowing them to anticipate changes, identify opportunities, and act with confidence. And as you adopt a similar approach, you enhance your ability to navigate complex environments and make decisions that support your goals. Networks and relationships also contribute significantly to wealth creation, because opportunities often arise through connections, collaborations, and shared knowledge, and the wealthy tend to cultivate relationships that expand their perspective and increase their access to information and resources, creating an environment where opportunities are more readily available. And as you begin to value and build meaningful connections, you create additional pathways for growth and success. Understanding risk is essential within this system, because every financial decision involves some level of uncertainty, and those who build wealth learn to assess, manage, and take calculated risks that align with their goals, balancing caution with ambition in a way that supports growth while minimizing unnecessary exposure. And as you develop this ability, you become more confident in navigating uncertainty and more capable of making decisions that move you forward. Ultimately, understanding the system behind wealth reveals that financial success is not random, but structured, influenced by principles that can be learned, applied, and refined over time. And as you begin to align your thinking with these principles, to see money as part of a larger system rather than an isolated outcome, you create the foundation for building wealth in a way that is intentional, strategic, and sustainable, allowing you to move forward with greater clarity and confidence in your financial journey. Part 2. Real-world patterns of how wealth multiplies. As you move beyond theory and begin to observe how wealth actually grows in the real world, you start to notice repeating patterns that appear across industries, countries, and time periods, revealing that the process is less about luck and more about positioning, decision-making, and understanding how to use money as a tool rather than simply earning it as an outcome. Because those who expand their wealth consistently tend to operate with a clear awareness of where value is being created and how they can participate in that process at a higher level. And one of the most common examples of this can be seen in business ownership, where instead of working for a fixed income, individuals create systems that generate revenue continuously, allowing them to benefit not just from their own effort, but from the combined output of processes, teams, and demand in the market. And as you begin to analyze these examples, you may notice that the difference is not always in intelligence or effort, but in the structure through which money flows. Consider the example of someone who chooses to build or invest in a business rather than relying solely on a salary, because while a traditional job offers stability and predictable income, it is often limited by time and structure, meaning that no matter how skilled or dedicated you are, your earnings are tied to the number of hours you can work, whereas a business, once established, has the potential to operate beyond your direct involvement, generating income through systems, products, or services that continue to function even when you are not actively engaged. And this shift from linear income to scalable income is one of the most powerful transitions in wealth creation, as it allows for exponential growth rather than incremental progress. And when this approach is combined with strategic reinvestment, where profits are used to expand operations, improve efficiency, or enter new markets, the result is a compounding effect that accelerates financial growth over time. Real estate offers another clear example of how wealth multiplies through structure and strategy, Because unlike many other forms of income, property can generate multiple layers of value simultaneously, including rental income, appreciation in property value, and potential tax advantages, and when leveraged correctly, where borrowed capital is used to acquire assets that produce income. Individuals can control larger investments with relatively smaller initial resources, amplifying their potential returns while still maintaining manageable risk through careful planning. And over time, as properties increase in value and generate consistent income, they create a stable foundation that can be expanded further, allowing wealth to grow through both active management and passive appreciation, demonstrating how a well-structured approach can produce long-term results. The stock market provides another powerful illustration of compounding and strategic thinking, because while many approach it with a short-term mindset, focusing on quick gains or reacting to daily fluctuations, those who build wealth through investing tend to adopt a long-term perspective, selecting assets based on their potential for sustained growth and allowing time to amplify their returns. And for example, consistently investing in strong, well-performing companies over many years can lead to exponential growth, not because of constant trading, but because of the cumulative effect of reinvested earnings and market expansion. And this patience, combined with informed decision-making, allows investors to benefit from the natural growth of economies and industries, turning relatively small, consistent contributions into significant wealth over time. Another pattern becomes evident when you examine how the wealthy use their money differently once they acquire it, because instead of increasing their spending proportionally with their income, they often maintain a focus on reinvestment, directing a significant portion of their resources back into opportunities that can generate further returns, whether through new ventures, additional assets, or expanding existing operations. And this disciplined approach ensures that their wealth continues to grow rather than stagnate, creating a cycle where money is constantly working to produce more money. And as you begin to adopt this mindset, you may find yourself making different financial decisions, prioritizing long-term growth over immediate consumption. Entrepreneurship also highlights the importance of solving problems as a pathway to wealth, because many successful individuals identify gaps in the market, unmet needs, or inefficiencies, and create solutions that provide value to others, generating income in the process. And this approach demonstrates that wealth is often a byproduct of contribution, where the more value you create, the more opportunity you have to earn. And as you begin to look at challenges through this lens, you may start to see potential opportunities where others see obstacles, allowing you to position yourself in a way that aligns with demand and growth. Technology has further accelerated these patterns, creating new opportunities for scale that were not previously possible, because digital platforms allow individuals to reach global audiences, automate processes, and create products or services that can be distributed widely with minimal additional cost. And examples such as online businesses, digital products, and scalable services illustrate how leverage can be applied in modern contexts, enabling rapid growth when combined with effective strategy and execution. And as you explore these possibilities, you may begin to recognize the importance of adaptability in an evolving economic landscape. Networking and strategic relationships also play a significant role in how wealth multiplies, because access to opportunities, information, and collaboration often comes through connections, and those who actively build and maintain relationships within their field or industry increase their exposure to potential partnerships, investments, and ideas that can accelerate their progress. And this demonstrates that wealth is not created in isolation, but through interaction, shared knowledge, and collective effort, reinforcing the importance of surrounding yourself with individuals who align with your goals. Another example can be seen in how the wealthy approach risk, because instead of avoiding it entirely or taking reckless chances, they focus on calculated decisions, where potential outcomes are carefully evaluated, and risks are balanced with opportunities for reward. And this strategic approach allows them to take advantage of opportunities that others might avoid, while still protecting themselves from significant loss, creating a balanced pathway for growth that is both ambitious and controlled. The concept of diversification also becomes important in real-world wealth building, because relying on a single source of income or investment can create vulnerability, while spreading resources across multiple areas reduces risk and increases stability. And this approach ensures that even if one area underperforms, others can continue to generate returns, maintaining overall progress and supporting long-term growth. Ultimately, when you look at these examples collectively, you begin to see that wealth multiplication is not a mystery, but a process built on identifiable patterns, including ownership, leverage, reinvestment, long-term thinking, and strategic action. And as you begin to apply these principles in your own life, even in small ways, you create the potential to shift your financial trajectory, moving from a position of limitation to one of expansion, where money becomes not just something you earn, but something you grow intentionally and consistently over time. Part 3. Power, Influence, and the Invisible Advantages of Wealth. As you continue to explore how the rich get richer, you begin to notice that money alone is only one layer of the equation, because beyond financial resources lies something even more influential, and that is power, the ability to shape decisions, access opportunities, and influence outcomes in ways that are often not immediately visible. And this form of power does not always appear as control in an obvious sense, but rather as access, as positioning, and as the capacity to move within circles where decisions are made and opportunities are created. And when combined with financial resources, this influence becomes a multiplier, allowing those who possess it to expand their reach and accelerate their growth in ways that go far beyond what money alone could achieve. One of the most significant advantages that wealth provides is access to information, because while information is widely available in general terms, high-value insights, early knowledge of trends, and strategic opportunities are often shared within specific networks, environments, or circles, and those who are positioned within these environments gain a clearer understanding of where markets are heading, where demand is increasing, and where opportunities are emerging, allowing them to act earlier and more decisively than those who rely solely on publicly available information. And this timing advantage can make a substantial difference in outcomes, as entering an opportunity at the right moment often determines the level of success that follows. Influence also plays a role in shaping perception, because the way people view opportunities, businesses, or ideas can be affected by who supports or promotes them, and those with established credibility or authority can amplify the visibility and perceived value of an idea, creating momentum that attracts further attention, investment, and participation. And this ability to influence perception can open doors that might otherwise remain closed, demonstrating that success is not only about what you do, but also about how it is positioned and communicated within the broader environment. Networks become increasingly important at this level, because relationships are often the bridge between potential and opportunity, connecting individuals to resources, partnerships, and ideas that can accelerate their progress. And the wealthy tend to invest in building and maintaining relationships that align with their goals, understanding that collaboration and shared knowledge can create opportunities that would be difficult to access independently. And as you begin to value these connections, you may find that your own access to opportunities expands, not through chance, but through intentional engagement with others. Another aspect of power is the ability to create or influence systems, because those who operate at higher levels often participate in shaping the structures within which wealth is created, whether through business, policy, or innovation. And this involvement allows them to align themselves with the flow of value at a foundational level, benefiting not just from participation, but from influence over how that participation occurs. And while this level of involvement may take time to reach, understanding its importance can shift how you think about your own role within systems. encouraging you to move from passive participation to active engagement. Reputation becomes a form of currency in this context because trust, credibility, and perceived reliability can open doors that financial resources alone cannot, and those who consistently demonstrate value, integrity, and competence build a reputation that attracts opportunities, partnerships, and support, creating a cycle where their influence continues to grow alongside their financial success. And as you begin to focus on building your own reputation, you create a foundation that supports both immediate opportunities and long-term growth. Control over time is another advantage that wealth and power provide, because as financial resources increase, individuals gain the ability to choose how they allocate their time, focusing on high-value activities, strategic decisions, and opportunities that align with their goals, while delegating or eliminating tasks that do not contribute significantly to their progress. And this control allows for greater focus, more intentional action, and the ability to operate at a higher level of effectiveness, reinforcing the connection between time, value, and success. The ability to take larger, more strategic risks also emerges as an advantage, because with greater resources and support, the potential impact of a single decision can be significantly higher, allowing for opportunities that are not accessible at lower levels. And while risk remains a factor, the combination of experience, information, and resources allows for more calculated and informed decision-making, increasing the likelihood of positive outcomes and reinforcing the cycle of growth. Another example of invisible advantage can be seen in education and mentorship, because access to high-quality guidance, whether through formal education or direct mentorship, can accelerate learning, reduce costly mistakes, and provide insights that might otherwise take years to acquire. And those who leverage these resources effectively are able to progress more quickly, building knowledge and skills that support their long-term success. And as you begin to seek out similar opportunities for learning and guidance, you enhance your ability to navigate complex environments with greater confidence. Influence also extends to the ability to create opportunities for others, because those who control resources, businesses, or networks can offer positions, partnerships, or investments, shaping the paths of those around them. And this dynamic not only expands their influence, but also creates ecosystems where value is continuously generated, reinforcing their position within those systems and contributing to sustained growth. Ultimately, understanding the role of power and influence in wealth creation reveals that financial success is not just about accumulation, but about positioning, access, and the ability to operate within environments where opportunities are created and expanded. And as you begin to shift your perspective, to focus not only on earning money but on building influence, relationships, and strategic awareness, you align yourself with a broader approach to success, one that allows you to move beyond limitation and into a space where growth is supported by both resources and influence, creating a foundation for long-term expansion and opportunity. Part 4. The Long Game: Why the Rich Think in Decades, Not Days. As you move toward a deeper understanding of how the rich continue to expand their wealth and influence, one of the most defining differences becomes clear in how they perceive time. Because while many people operate within short-term cycles, focusing on immediate results, quick wins, and temporary outcomes, those who build lasting wealth tend to think in decades, aligning their decisions with long-term vision rather than short-term pressure. And this shift in perspective transforms not only how they act, but how they evaluate opportunities, manage risk, and measure success, creating a foundation that supports sustained growth rather than temporary progress. And as you begin to adopt this approach, you may notice a change in how you prioritize your actions, placing greater emphasis on what will matter over time rather than what feels urgent in the moment. Long-term thinking influences financial decisions in profound ways, because it encourages patience, discipline, and a willingness to delay gratification in favor of greater outcomes. And for example, instead of seeking immediate returns from an investment, Those who think in decades are more likely to allow their assets to grow, to reinvest earnings, and to benefit from compounding over extended periods, understanding that the most significant gains often occur, not at the beginning, but after years of consistent growth, and this patience allows them to avoid impulsive decisions driven by short-term fluctuations, maintaining a steady course that aligns with their long-term objectives. This perspective also shapes how they approach business and career decisions, because rather than chasing quick opportunities that may offer immediate rewards but limited sustainability, they focus on building systems, skills, and assets that will continue to generate value over time. And this might involve investing years into developing expertise, building a brand, or creating a business that can scale, even if the initial returns are modest, because they understand that long-term value often requires time to develop. And as you begin to think in this way, you may find yourself making decisions that prioritize growth and stability over instant results. Another important aspect of long-term thinking is the ability to remain consistent despite temporary setbacks, because when your focus is on the bigger picture, short-term challenges lose their power to derail your progress, becoming part of a larger journey rather than defining moments. And this resilience allows those who think long-term to continue moving forward even when results are not immediately visible, trusting that their efforts will compound over time. And as you develop this perspective, you strengthen your ability to persist, to adapt, and to maintain momentum even in uncertain conditions. Wealthy individuals also tend to structure their finances in ways that support long-term growth, such as diversifying investments, planning for future opportunities, and creating systems that ensure stability across different economic conditions. And this strategic approach reduces vulnerability while increasing the potential for sustained expansion, allowing them to navigate changes without losing progress. And as you begin to apply similar principles, you create a financial structure that supports both growth and resilience. The concept of legacy often emerges within this long-term mindset, because when thinking extends beyond immediate needs or even personal lifetime, decisions begin to reflect a broader perspective, focusing not only on accumulation, but on preservation, impact, and continuity. And this might involve building assets that can be passed on, creating systems that continue to operate over time, or contributing to causes that extend beyond individual gain. And this broader vision adds depth to the concept of wealth, transforming it from a personal achievement into something that can influence future generations. Another example of long-term thinking can be seen in how the wealthy approach learning and personal development, because instead of seeking quick knowledge or temporary skills, they invest in continuous growth, understanding that the accumulation of knowledge over time creates a competitive advantage that compounds just like financial investments. And this commitment to learning allows them to adapt to changing environments, to identify new opportunities, and to remain relevant in a constantly evolving world, reinforcing their ability to sustain success over time. Time also becomes a strategic resource in this context, because those who think long-term are more intentional about how they allocate it, focusing on activities that contribute to their future goals rather than being consumed by immediate demands. And this might involve dedicating time to planning, reflection, or building relationships that will yield value in the future, creating a balance between present action and future impact. And as you begin to manage your time in this way, you increase your ability to create meaningful, lasting results. The ability to think in decades also reduces emotional volatility, because when your perspective extends beyond short-term fluctuations, you are less likely to react impulsively to temporary changes, whether in markets, business, or personal circumstances. And this stability allows for more rational decision-making, supporting consistency and reducing the likelihood of mistakes driven by emotion. And as you cultivate this mindset, you strengthen your ability to remain calm, focused, and aligned with your long-term vision. Ultimately, the long game is what separates temporary success from lasting wealth, because it shifts your focus from immediate outcomes to sustained growth, from reactive decisions to strategic planning, and from short-term thinking to a vision that extends far beyond the present moment. And as you begin to embrace this perspective, to align your actions with long-term goals, and to remain consistent in your efforts, you position yourself not just to achieve success, but to sustain and expand it over time, creating a path that reflects both intention and endurance. Conclusion: the real truth about money and power. As you reach the end of How the Rich Get Richer, the truth about money and power, take a moment to reflect on the deeper understanding you have gained, because the journey you have taken is not just about money, but about the systems, the thinking, and the behaviors that shape how wealth is created and sustained. And what becomes clear is that wealth is not random, nor is it reserved for a select few, but is built through patterns that can be observed, understood, and applied, including long-term thinking, strategic action, and the ability to align with opportunities that exist within larger systems. Remember that this knowledge becomes valuable only when it is applied, when you begin to shift your perspective, to think differently about money, time, and opportunity, and to take steps, however small, that align with these principles, because transformation does not occur in a single moment, but through consistent action over time. And as you continue on your journey, you may begin to notice changes not only in your financial decisions, but in how you see the world and your role within it. Thank you for listening to Audiobooks. If this audiobook has opened your perspective, if it has helped you understand wealth and power in a new way, then take a moment to support the channel by subscribing, liking, commenting, and sharing this with others who are ready to think differently and take control of their financial future, because your support helps this message reach more people who are seeking clarity, growth, and transformation. Stay aware, stay strategic, and keep building your path to wealth. This is Audiobooks, and your journey continues.